Okay, welcome to this breakout track D on the business value of AI. I'm Dion Bongaerts. I'm Associate Professor of Finance at RSM and Academic Director of the FinTech area of expertise at ECDA. Today, I would like to talk with you about something new in FinTech, or relatively new in FinTech, which is open banking, strongly related to the PSD2 directive relatively recently introduced by the European Union. And we'll explore to which extent there's a role of AI in this new world of banking. And to get everyone in the right mindset, I would like to quickly ask yourself to answer the following question. Suppose you want to profile a client for any type of application, typically a sales application. Which data would be more useful for you? Google search history data or transaction records of the bank account of that person? I'll give you a moment to think about that. And probably about 50% of you said, well, I like the Google search history better. And the other, about 50%, would say, well, transaction records of the bank are way more useful because I can really see what people spend their money on. So there's not such a clear answer. What would be even better for this profiling exercise is if you could combine them. It's kind of the ultimate dream for training and applying an artificial intelligence algorithm. Fortunately, privacy regulations come into play, and we don't allow this to be done unbounded. But wait a minute, why was I asking you this question? Are my bank records not safely with my bank, not available to anyone? After all, financial records are some of the most closely guarded secrets of most people. Well, the answer is kind of no. Banks are now required, and really required, to share their client data with licensed third parties. Before you get concerned, this is only upon client approval. So there's checks and balances with regards to privacy. Now, going back to my previous question, can you guess which big party got a license? Very good, Google. So let me quickly talk you through about what's happening. In 2015, the European Parliament accepted the PSD2 directive. And this PSD2 directive laid the groundwork for an open pan-European financial system with banks at the core and other non-bank parties, but still engaged in financial services as a shell around it. These are small companies, we usually call them fintechs, but often also these large tech companies, which are often labeled as large tech. So these are the Googles, the Apples, the Amazons, and the like. And the purpose of this directive was to get a more competitive, more user-oriented, and more innovative financial sector. Now, gradually, this directive has been rolled out in all of the EU member states. And that process always goes slowly. In the Netherlands, it went exceptionally slowly because some of the large banks put forward concerns about client security issues. But finally, effective of February 2019, also in the Netherlands, PSD2 is effective. Now, so as you can see, PSD2 is still in its infancy. But what can we expect from it? To get a better idea of that, let's have a look at the key provisions of PSD2. Under PSD2, banks need to start sharing their client data. Think about balance sheet transaction records, financial products a client has upon client request. And they are allowed to share with 3 other types of parties. One is other banks. They already have a banking license in one of the EU member states. Another one is an account information service provider. Such a service provider need not be a bank. It can be a financial service company without a banking license. It may not even touch any money or any money streams. What an account information service provider can do, once you give it access to your account information, is that it accesses your account information and processes that, for example, to give you an overview on what you're spending, or to give you advice on how you can more wisely spend your money. And then there's also payment initiation service providers. Those are other third parties. Think about Sofort or Mali that can initiate payments on your behalf. As such, they can be integrated in web stores to provide a smoother payment experience than what banks can currently offer. They can transact on behalf of clients. Now, the different type of players can also be combined. So you can have a player that has account information services and also payment initiation services. An example of that would be an application that manages your saving deposit money by looking how much you have where, at which interest rates, and automatically routing your savings to the savings account with the highest interest. Now, banks need to facilitate this whole process with a secure and standard API. They need to offer that for free. They're responsible for the API, so also liable. Well, you can imagine that for banks, this is a big disruption to their information monopoly. And also, it comes with additional costs for security, API development, and potential liabilities. But there's also business opportunities, among others, for banks. Banks that have very successful products with a high customer value can more easily roll out their products to clients of other banks. Bank clients are typically locked in because there's hurdles of changing banks. With PSD2, it becomes easier to access each other's clients. Banks are in a natural position to engage with these clients because they benefit from large amounts of data they have already obtained from their own clients, and therefore they have been able to train their algorithms. Moreover, they have an established brand name, product range, and the like, and they're closely supervised by regulators, which fosters trust. Now, banks can also exploit PSD2 in a second way. They can start to develop premium APIs as a supplement to the standard APIs that they need to offer for free. After this talk, you can go to the website of any of the larger banks and search for development portal. And you'll find the development portals of banks that offer the standard APIs, but also several non-standard APIs. And once you land on such a site, you also see advertisements for new APIs that are going to be released soon. And there's fees to using these non-standard APIs, through which banks also can generate additional income. Now, for other parties, non-bank parties, starting to engage in financial services, such as fintechs and large techs, there's also business opportunities. One of the most straightforward ones is the one that we started with, combining financial data with other data in order to better understand customers and provide a better customized service, either in terms of product design, in terms of price, or in terms of user experience. For example, this diversity of data could be used in credit approval algorithms, because of which credit is extended only to credit-worthy clients, or more often to credit-worthy clients, because of which interest rates to clients can be lower, while at the same time boosting profits of the parties supplying the funds and doing the screening. Another application would be the Know Your Client process, the KYC process, and all kind of provisions to prevent money laundering. These processes are currently very costly for the financial sector and consume a lot of resources. Some of the large banks have 10% of their employee force busy with this. Now, also third parties need to do customer due diligence. If there are third parties that are particularly good at this process, they can take it on and make a profit out of it. If there are parties that are not good at this process, they can outsource it to others to the degree allowed by the regulators. As said, there's limits on the access third parties can get on client data. And those limits are split in 2 or 3 levels. The first limit is because there is a license required from an EU member state to act as a PSD2 service provider. So if you want to offer account information services or payment initiation services, you need to have a license from a regulator in one of the EU member states. Once you have that in one of the member states, there's passporting rights, like in many services, and you can access clients in any of the EU member states. Now, there's heterogeneity in local regulatory regimes, because of which one can expect that there's a gravitation of fintechs that register with regulators in certain jurisdictions, such as Lithuania, that is particularly welcoming to such type of parties. The second hurdle to access client data is client approval. There's 2 different regimes. For payment initiation services, this approval is payment specific, or it's specific to streams of payment. So in my example of moving my deposits around, I need to give approval to transfer money only between the selected the selected accounts. For account information services, approval needs to be renewed every 90 days. So it's a more general approval that a third party obtains, but there needs to be every quarter approval to continue the service. And then the license that is obtained is purpose specific. So an account information service provider can't engage in payment initiation unless it also gets a payment initiation license. Now, in this new world of banking, what can we do with artificial intelligence? I'll give a few examples. In this new world of banking and payments, artificial intelligence will play a crucial role in fraud detection. Third parties payment initiation service providers can distinguish themselves by better fraud detection. Therefore, lower burden on a merchant that uses the service, and thereby compete with a bank that also offers a payment service. At the same time, the payment initiation service provider may not see all the transactions of a client and therefore miss certain suspicious transactions. This is where the role of a bank comes in, or maybe of the merchant itself in detecting fraudulent transactions. There's also an additional need there. In the KYC process, that also third parties to a certain degree need to conduct. There is also a need for artificial intelligence in view of the large resource consumption this process takes at the moment. Another segment where AI has enormous potential here, and about which banks are pretty concerned, is customer recognition and retention. Now, with the opening up of their data monopoly, banks risk losing their status as a central access point to a client that allows them to cross-sell all kind of additional financial services to their clients. As such, banking risks becoming a commodity with low margin and a utility role. Now, if banks are successful in drawing their clients to their portal and offering them services of others, if they keep in contact with their clients, they can charge higher margins and have a better market position. So understanding their client demands, and using that information to provide the client with an appealing user interface that is customized and is relevant for the client is crucial. And AI can play a big role in it. And then finally, AI can play an important role in the core business of the bank. The core business of a bank is taking deposits and lending them out. That's a game of large numbers and risk. The better you can profile as a bank or another third party your client, the cheaper you can offer credit and the lower risk you run. A final application is that financial service providers can use artificial intelligence to measure price elasticity of their clients and thereby optimize on their pricing policies. At ACTA, we were very curious about what this new world of open banking and AI will bring us. And therefore, we would like to solicit your questions and your data. If you have interesting questions that are particularly relevant in the context of open banking, existing questions for which open banking provides the infrastructure or data to study them, or new questions that become relevant because of open banking, please contact us. We will bring the expertise. We can set up joint research projects involving faculty, PhD students, or student interns for thesis internships. And together, we can analyze the impact of PSD2 and open banking together and understand the world of finance a bit better. This is the end of the presentation on my side. I would love to take any questions.
Thank you very much, Dr. Dion. My name is Jose Lafite, and I will be moderating the Q&A. So we have a few questions lined up already. The first question is, what do you think about data gathered through the use of PSD2 and the opportunities to reduce bookkeeper work?
I think it's a great opportunity. With one of the larger banks, I already saw custom APIs. So APIs you need to purchase at a premium to actually do that. For you. And this is most likely a cost saver. At the same time, banks are also offering banks are also doing credit assessment, especially for smaller customers, using direct transaction data of customers. You can now, as a bank, also do that with transaction data of customers that bank at another bank. So you can get a more competitive market for credit for SMEs, which I think on the one hand is exciting. On the other hand, may also be problematic, because banks may start to see SMEs as less attractive customers. This is one of the questions that I'm myself very curious about, and I would love to investigate.
Okay, perfect. Thank you very much. The next question asks about if you think that the heterogeneity of regulatory regimes for the passporting rights will lead to the creation of fintech clusters across Europe.
It may. The financial sector is complaining a lot about the regulatory burden, and one of the questions I have with regards to this new directive is whether fintechs will help in reducing that regulatory burden. In which case you would expect more of a spread, or whether fintechs will kind of try to arbitrage the heterogeneity in regulatory burden and the very high regulatory burden that banks have to begin with. I think this is something the future will tell. You do see a bit more attraction towards the more fintech-friendly jurisdictions in applying for licenses. But I think at the moment it's still too early to tell. One thing I would like to add to this is that we saw recently in Germany a big fintech blow up. And that could actually counter such regulatory arbitrage effects.
Okay, perfect, interesting. Only time will tell at the end,
Yes.
With almost everything. The next question asks about services like Apple or Google Pay.
Yes.
This visitor is wondering whether these services have any advantages coming with the PSD2 and how can banks counter this?
These Google Pay, Apple Pay operate largely using that infrastructure that is being set up. And some banks, like Rabobank in the Netherlands, I thought, were among the front runners of offering Apple Pay and used that to distinguish themselves. Hey, we offer that from other banks. So also there can be a collaboration. It need not be hands-on competition. What you also saw today was in the news that Google aligned with Deutsche Bank for a variety of financial services. And that way, Google gets access to the financial service sector at the bank level, whereas it doesn't need to have a real banking license in order to do so. So also there, you see that these parties start to collaborate together. So yes, there could be competition, but there's also opportunities for collaborating and in the end, offering better products.
Okay, perfect. Thank you very much. The next question talks about the opportunities that come with AI. And yeah, this visitor asks, which AI implementation underused right now do you envision as high potential for future usage?
That's
It's a tough one.
That is a tough one. I think it's not so much the type of algorithms that are being underused. It's more that certain data are simply not available. If you take credit scoring, for example, for which I also worked a while in the real sector, there's pretty simple models that perform reasonably well, like logit regressions or support vector machines, that are also nicely interpretable. Once you start to combine that with non-financial data, like Facebook images, like Google search histories, I could imagine that other more advanced algorithms that use deep learning get an edge over these relatively simple algorithms. Of course, this comes at the expense of interpretability. Do you still understand what's happening in the black box of the algorithm? And to which extent do you need to understand that?
Okay, perfect. Thank you very much. The next question, it's a very interesting question, and asks about how can one prevent issues that might arise from API and AI and the free movement of savings that one might get a huge pooling effects and causing some banks becoming insolvent or causing strange movements in interbanking rates?
Okay, that's an excellent question. So there's a question more at the economics. So one of the biggest potential problems for banks is if they see their deposits run away. At the moment, when now the market is flushed with low interest rates, there's enough deposits around. Banks discourage clients to put their deposits at the bank. That's not that much of an issue. But we saw during the financial crisis an enormous run on banks. We also saw during the sovereign debt crisis that customers took their deposits from Greek banks and moved them somewhere else. And that created immediate liquidity problems for banks. Now, if you develop such an app that starts to move around your deposits, such an app can create this kind of fragility in the financial sector. One thing you could do as a financial institution against that is your product design. You can design products that give you a relatively favorable interest rate, but only if you keep your money at the bank for a somewhat longer period, for example, 3 months or so. That gives you enough leeway to react to moves by competitors. And that also will make it less attractive to move the money out of such a savings deposit. And keep in mind, for a bank in trouble, this may also be a lifeline. If the deposits become more mobile, a bank in trouble may also find that it's somewhat easier to attract deposits again.
Okay, perfect. Thank you very much. So we have we don't have any time left for any more questions, unfortunately, because there are still quite a lot of very interesting questions waiting to be answered. But I'm guessing you can always reach out to Dr. Dion on LinkedIn, and you can always stay involved with ECDA and the rest of organizations involved in the event. And thank you very much, Dr. Dion, for your time, and thank you very much to all of you for attending the event.
Thank you.